Welcome to TradeTheMBI.com. This is John. This reports for the 19th. Well, like we were talking about, you had the nice improvement here and the push of DOC with orange having dipped below. That gives you your push towards a buy. The problem is this, the steel unable to reset. The move above 13.5, as we've talked about before, this is circular kind of indication reading here where that's effectively it coming from underneath. So that was enough support, but it's not sustainable at these levels. And so once it dips back down, you get fade, and that's exactly what we got. And so not a shock. I mean, we had the MBI white riding higher with magenta leading, and that potentially has the power to create additional short covering. But as we saw here, we're already pretty much using up what power is available. When you look at the extreme, we're almost at red, and that shakeout still below the negative 13.5 line right here. That makes it difficult. It doesn't mean we aren't going to continue to push up against that 23%, trying to find a way over it. But you still have a lot of headwinds as far as where economic growth actually is, and until we get a clearer picture on that, this is part of that malaise. And you've even had Trump and them now starting to warn it's going to take some time, and that's because the lawfare thing is delaying things. It's going to take a while to try and move a shift from big corporate profits with easy money, buybacks, and that to actual sustained economic growth or putting money to play that actually produces something for GDP as opposed to just trading profits, that kind of situation. From an NQ standpoint, it was a little bit worse. And you can see now you have MBI white clearly leading, but still you have magenta above. So that's enough to usually maintain support. But to move to 0% with the MBI white leading, not impossible in this particular case. We definitely would have to watch from an intraday standpoint, but also you don't have the same situation in S&P. You have DOC here where the midterm buyers in green have crossed over cyan, which led to that transition. So we can see that it's not necessarily a tech play, it's more a broader market influence. And it's an interesting one because the reality is your smaller funds, your Russells and things like that are probably going to end up faring better out of this than the broader market, simply because of that transition from where the economy is designed to benefit. From a treasury standpoint, it's just nothing. You're getting no activity from the Fed whatsoever. They're just sort of sitting on their hands on this because what are you going to do? They really don't know where the tariffs are going to lead. Well, they have their own presupposition as to where it's going to go. But a lot of these trade deficit things and that, it creates interesting dynamics because if you can quantitatively get that under control and flip things around, you're already seeing businesses, as I talked about last year, they should have started moving towards the U.S. They held off a little bit, and that delays things obviously even further, but still not out of the range. The big question here is oil and whether or not there is enough of it that's being processed, and that's the big question. You can pump all the oil out of the ground you want, but you got to be able to refine it, and the capacity of the U.S. in that situation is limited because they've been so slow in approval for a lot of environmental reasons that they just isn't the capacity, and that's a problem. And you're not going to resolve it quickly. So, but from that standpoint, you're still way too elevated. It's not inflationary in the broader sense, given where we're already at, but it certainly doesn't help in bringing prices down or under control in any way, shape, or form. The euro is still riding high, and it's euphoria over the idea that they're going to take over control of Europe in a broad sense and eke the U.S. out and become the next world force. And yeah, that's a pipe dream, but some people have bought into it right now, and they think that the U.S. is going to suffer with these tariffs. And I think they just misread it completely, but that's okay. We got to go with the trade that is, and the trade that is that continuing, and people are still looking for the safe haven in gold, now pushing solidly above that 3K level. And this was no surprise. We've been expecting this for quite some time, and it's been a slow move, but relatively speaking, it's still catching up to where the move for crypto had been in its giant move. Now, crypto kind of held because they really were expecting a lot more from what they thought Trump and them were going to do as far as buying actual crypto for the treasury. That's not happening. So this was just that move of what the U.S. already has and trying to put it into an organized platform. a whole lot of nothing, which is why the market faded on it pretty quick. It lost a lot of the excitement, so to speak, and ETH has suffered incredibly from that. And we'd have to shrink the chart way back to get down to where this last was at that level. And that makes it difficult in the crypto space when you consider how much power it takes to stay in that versus just holding on to gold. And to spend anything for that other than potential storage fees and things like that, depending on how you purchase it. But in paper form, not so much. From a 50K standpoint, you can see what happened here. It was pretty clean. We'd had the attempt of the NBI white spikes that had led to a little bit of softness, but the magenta kept leading. Once it broke down below the 33 level, and then you also had the blue below gray in this particular case, it was just a matter of seeing the continued pop of NBI white. And as we got to the 76%, NBI white broke above it, and from that point it was the move, and you expect the 50% at that particular stage. Now we're below 50%, and you still have NBI white leading, and that's been a strong short charge, but magenta is held up. It's still below 25. If it ekes up, it's definitely going to break past the 50, and then you'd be looking at a short cover run to the 100% again. But a fade back down here, and you're definitely looking at the zero. So it's an either or. It's not an in-between situation. So it's just a matter of following where we see movement. In this particular case, you got shakeout moving to positive, any dip back into the negative, and I would definitely be expecting that return to the 0 point. From that intraday early 5-minute chart, here we go. It just started the morning, and it was a complete collapse going across, and there was just no excitement whatsoever. So that just ruining all the call. Gamma in that particular case are trying to push it back up here in the Euro session at this particular stage. Doing all right there on the plus side of it, so that'll hopefully, if they can get that to open, wipe out some of the power from the put action, and you even things out again. And that's the intraplay of the every week now that we're seeing, and that's why we're seeing such volatility. Because it has to play out that way for them to even their book, and they're going to continue to do that, and that's fine. It's just the signal intraday readings have been just fine. There's no difficulty in following that. From the broader perspective, when people want to talk about, where is the long-term outlook for this situation, well, at this particular point, you're still 58.90 would be your, big upside in this particular case, simply because of the magenta leading. But the reality is, without a reset of that steel coming back down, you're looking at a malaise. Maybe you're going to get to the 38 if you're lucky, but the reality is it just isn't enough to sustain that. Now, how we play that as it gets to the end of the month, that'll be more interesting. I think there's more sell pressure than buy pressure at this particular stage, so that's where to keep things in your mind. As always, though, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.